Hello, everybody. Today is 24th of January 2025, and I have a guest with me today, Peter Schiff, who needs no introduction. Oh, Peter, how are you?
Oh, I'm doing good. Getting ready for the weekend. How are you doing?
Very good, very good. Nice to have you on my channel. It's the first time we had a chance to talk like that, so I hope it's not going to be the last one. Okay, let's start with the Fed. Peter, next week we have a meeting. Fed is not expected to be raising the interest rates at all. Does it
Hmm.
really matter at this point what they do? And let's say, are they still gonna, with the Trump, go with the tactic not to upset the markets?
Well, you know, last night the Bank of Japan raised rates to 50 basis points, 25 basis point increase. So they doubled rates overnight. But that was the biggest increase in 18 years over there. But they're just getting started because inflation, they also came out with their inflation numbers last night, their official numbers. The CPI was up 3.6% in Japan last year. This year, it's going to be up more than that. And they're still way behind the curve. And the yield on a 10-year JGB is still about 1.2%. So it's got a long way to rise. So I think that could be the big story as far as rates in 2025 really is how high the rates go in Japan and what that portends. I don't think the Fed is going to do anything. I know Trump wants the Fed to cut rates. There's no way they're going to hike rates, although that's what they should be doing. I think they'll leave them where they are. But I think what's going to be significant is that inflation, at least the way we measure it, is going to be quite a bit higher in 2025 than it was in 2024. I think 2024 was the low, the trough for inflation. And now we're headed back up. And that's going to be a big problem. It's going to be problematic for Trump, but it's going to be a big problem for the Fed. And the
So,
fact that the Fed is not going to raise rates, even as inflation is rising, is a significant development because that means real rates are going to be plunging, and
okay.
that's going to be negative for the dollar. It's going to be bullish for commodities. It's going to be bullish for gold, and so those are the trends I think that are going to be important.
But Peter, but what justification they will have? We have a what December 2.9% inflation. Let's say inflation will go up as it is going last couple of months, and is going to catch up to like 3.5, 3.6. What justification they have not to raise rates?
Well, I mean, they'll say that they need more data. They were, I don't know if they'll use the word transitory again, but they'll look at, oh, these are one-off, short-term blips. We still have a restrictive monetary policy. We just need to hold tight. They'll come up with reasons to delay the hikes. I guess I could just imagine Trump going ballistic
No, that's
if
my
if,
point. That's my point.
the
What
Fed starts
Trump's going to
cutting.
do? What Trump's going to do? Because he wants the lower interest rates. Are we going to have 3.6? Isn't that going to create a panic on the bond market?
Yeah, and look, and there's going to be more talk about, what's so special about 2%, why 2%, what's wrong with 3%, that you're going to hear a chorus of people saying that inflation is really not that bad. Um, but they're going to claim it's going to take more time for the rate to come down. It ebbs and flows. I mean, they'll be able to procrastinate it, but eventually the rate is going to get so high that they're going to be in a real bind.
Hmm. But I still don't see the bond market like reacting with no anger, if I can put it that way. I mean, there's going to be 10 years old, 10 years bond market. The bonds, it's just going to skyrocket. It's not going to be 7%. It's going to be 8, 9. I mean, it's going to. I
Yeah,
can.
well, obviously we can't handle that. Donald Trump gave us, a talk yesterday at Davos, and he described the interest rates we have today as sky high. He said it twice. We have sky high interest rates. What do you mean sky high? They're in the fours. So I mean, they're still historically low. They're not high, yet he wants them lower. And obviously, Powell's term is up in about a year, and Trump's going to nominate somebody else. And you better believe he's going to be putting someone in there that he's confident is going to cut rates no matter what.
Yeah. I just don't see that happen, to be honest with you. I just don't see that with the current market conditions, that they're just going to take it on the chest and just keep going. I can see a lot of trouble in 2025. I don't know if you agree.
Yeah, no, and it's more than just the rate cuts. It's going to be the return to quantitative easing. Nobody talks about that, but that's what's going to happen because these budget deficits are going to go off the charts. We're not going to get the big spending cuts, right? All this noise about Doge, nothing substantive is going to happen with Doge. But we are going to get tax cuts. And a lot of these tax cuts are highly stimulative in nature because they're cuts on tips, on overtime, on Social Security. So all this extra income is going to be spent, and that's pushing up prices, and it's going to push up the deficits. Trump is already backtracking away from the tariffs, so there won't be a lot of tariff revenue coming into the government to offset the loss from the lower income tax. So you're really stimulating demand at a time where inflation is already high and the deficits are going to explode. The national debt is probably going to hit 40 trillion within a year. We're going to be adding 3 to 4 trillion a year in debt. So this is a time bomb here. I mean, in fact, it's already, I think, going off. When the interest on the debt is 1.2 trillion or so, sometime next year it's going to hit 2 trillion, and by 2026 we'll be spending 2 trillion a year just paying the interest on the debt, and it's going to keep rising from there.
Peter, tell me why Elon Musk cannot cut? Why the Dodge Commission is a failure before it goes on the market? Let's put it this way. Why they cannot do that?
Well, because they've already taken everything off the table of any substance. They can't touch interest on the debt. They want to increase military. Trump was saying yesterday that he wants Europe and everybody else to spend 5% of their GDP on defense. We don't even spend that much. We spend 3.5%. But Trump wants to spend more on the military. Interest on the debt goes up on autopilot. Can't touch Social Security. That's going up. In fact, he's making that problem worse. And Congress just made it worse by expanding Social Security benefits. And now he wants to exempt them from tax. Can't cut Medicare, Medicaid, Obamacare. So all the big ticket items are just off the table. And so what's left, even if they eliminated half of what's left, it wouldn't make a big difference. But they're not going to eliminate anything. They never do. I mean, I remember all the fanfare of the Grace Commission when Ronald Reagan was elected. And Reagan is actually a conservative. Trump's not a conservative. He's, and he's certainly not a libertarian. And so I don't think we're going to get any meaningful cuts. It's just not going to happen. I mean, he didn't cut spending at all. It went up a lot during his first term. So I think he used a bit of a different script this time to get elected, but he's a salesman. He's in office now, and the last thing he wants is a recession, and he's not going to cut government spending because that means that the people who get that money aren't going to have it to spend, right? So could temporarily hurt the GDP.
Peter, let's say they would cut. What cuts would have to be done? Is it 5, 10%, 15% of the budget in order to actually quote unquote fix the situation, or is really kind of unfixable?
Well, it's really unfixable in that it's not just about cutting spending. We've got to repair the structural damage to the economy. That's the result of decades of bad monetary and fiscal policy, where we have an economy that runs on consumer credit and debt and people living beyond their means and spending money they don't have, buying products they didn't make. And so we have huge trade deficits and budget deficits, and we have an entire economy that's predicated on those deficits continuing. And so in order to get to the root of the problem, we have to have a restructuring of the economy. You can't do that without a severe recession. The bigger the boom, the bigger the bust. We have a lot of mistakes that we need to correct. And so you can't do that and avoid a recession. But the only goal of any incumbent politician is to avoid a recession, even if the recession is part of the cure, which is why we never get a cure. We just get a bigger bubble. And that's all Trump is going to do, is try to blow more air into the bubble and hope it doesn't pop until his successor takes office. So yeah, we're just not going to do it. I mean, look what happened with Argentina and Javier Milei, and a lot of people want to talk about, oh, Trump is like our Milei. Milei actually is a libertarian. He actually did make sharp cuts in government spending, and Argentina went through a recession that they've now come out of, but the initial recession was bigger than our Great Recession after the 2008 financial crisis, which was the biggest recession we've had since the Great Depression. They had a bigger one in Argentina. That's what has to happen. You got to be willing to bite the bullet and deal with the short-term pain. In Argentina, they were willing to do it, and Milei didn't sugarcoat it. He told them it's going to get worse before it gets better, and they were okay with that. Americans were not told that, nor are they okay with it. They don't want anything to get worse before it gets better. And Trump promised an immediate boom. And he's already said we're back in the golden age of America. It starts now, right? No bitter tasting medicine, no austerity, no piper needs to be paid, right? According to Trump.
So what options does he really have? Is it energy is going to fix? He's betting on the energy. He's going to drill, baby, drill. He's going to do coal, I guess, the gas, natural gas. I mean, is that going to fix the problem?
Well, we've already been drill, baby, drilling because, our production is high right now. We're a net exporter. So we've already drilled a lot. The problem is the big oil companies have been cutting back on CapEx because the oil prices are too low. That's the problem. So the only way we're going to get more drilling is if we have higher oil prices, which is the opposite of what Trump wants. And the more Trump starts pounding the table that I'm going to force OPEC to cut oil prices, the less the domestic industry wants to go out and spend money to try to get oil, because they need higher prices, not lower prices. And the other irony is Trump wants to blame the inflation on oil prices. That's backwards. That's blaming the rain on the wet sidewalks. I mean, oil prices went up in part because of inflation, not the other way around. But oil prices have not actually been the big problem for people. Oil prices, we're at like $77, $78 a barrel. That's pretty good. That's a low price. In 2008, we were at 140 when we peaked out. So we're about half of what we were back then. It's almost all the other prices. It's the food prices that are a big problem, and they keep going up, and a lot of other prices that are going up. And the CRB commodity index last year was up huge, and it's already up big again this year. I mean, double-digit moves we're seeing in commodity prices. So oil's been one of the lone bright spots, but that's going to change. I mean, I think oil prices are headed a lot higher, and so are all the other prices.
He's betting on the cheap oil prices. He's betting on that. He probably $40 a barrel. That is goal. Why this is not realistic? Why the oil probably will never go to below $50? Why is that?
Well, I mean, never say never, but I don't expect it to happen. There's just too much inflation for it to happen. I mean, fiat currencies have just lost too much value for you to be able to buy a barrel of oil for $50. You need a lot more. I mean, now in terms of gold, in fact, if you look at the price of oil in terms of gold, it's almost as cheap as it's ever been, like in a century. Like if you throw out the COVID, which was an aberration, they were giving oil away. It had a negative price for a few days, but the number of barrels of oil you buy for an ounce of gold is historically low right now. So in real terms, oil is already cheap in terms of real money. So if oil is cheap, it's more likely to go up than down, right? But and the reason that Trump wanted to pretend that we have inflation because of oil was so he could tell the public, I'm going to solve it with the drill baby drill, right? But that's not going to work. And in fact, everything Trump is likely to get done is going to throw gasoline on the inflation fire.
Tariffs is a 25% on Canada is going to help. Is it Mexico maybe 25? China, is that going to help? Anything's going to help?
Well, the tariffs are taxes, and the government needs more taxes, right? Because we have a huge deficit. So the tariffs will help reduce the deficit somewhat, but they'll be more than offset by other tax cuts. So the deficit's going to go up. The problem is we're not likely to get the tariffs for that reason. But Trump misrepresented the tariffs to the voters as if we're going to get government and we're going to have Canada pay for it. We're going to have Mexico pay for it. He talked about establishing a Department of External Revenue, like the U.S. government is going to go around the world collecting taxes from China. That's not going to happen. That's not how it works. Tariffs are on Americans. The Americans pay the tariffs, nobody else. And that's probably why we're not going to have a lot more tariffs. But if we do, it's just, Americans are going to bear the burden.
But would they fix the problem? Let's say that he is going to put 25% tomorrow. He says
no. It's not going to fix the problem. It's just going to make imports more expensive, but it's not going to make domestic alternatives more viable because we don't even have them in most cases. 80-90% of product categories are imported. We just don't even have the capacity to produce that stuff domestically. So either we stop importing it or we just pay more to import it, which is likely what's going to happen. I mean, maybe we'll import a little less as prices go up and certain people are eliminated from the market. They can't afford to buy, so they don't. The other people just pay more, and that's what's going to happen.
So he's bluffing?
Huh?
He's bluffing the tariffs. He's a part of the negotiation tactic against Canada or Mexico or China.
Yeah, look, I don't know. I mean, he wants to claim he's going to negotiate us out of these problems. Look, the problem isn't bad trade deals. Hell, the trade deal we've got now with Mexico and Canada is the one that he negotiated. We got rid of NAFTA and we got the USMCA, and he said it was the greatest deal ever. And now he's saying it sucks. I mean, it's his deal.
Yeah.
So it's all nonsense.
That is true. Now, let's go back to the inflation. What needs to be actually done in order to inflation to come down below 2%? What is it? Just the government cuts in the budget? What is there anything else can be done? Is it because you're suggesting energy prices? It's just
first of all, it's when the government admits that inflation is 2%, that doesn't mean it's 2%. It's probably 4%, at least, because the CPI is very inaccurate by design. It understates what's going on with prices. But what it would really take to lower inflation would be a big decline in the money supply. We got to suck up all the liquidity that came in, especially since COVID, but even before COVID, going into the QEs, from the financial crisis. So the Fed's got to shrink that balance sheet. It's got to unload a lot of its treasuries and mortgage-backed securities, far more than what it's already done. And we need significant cuts in government spending. But we're not going to get either of those things. So inflation is not coming down. I mean, the only hope we have is a productivity boom to disguise it, right? So like if AI can deliver this big boom in productivity, then that could masquerade, mask the inflation. Because if prices should have gone down by 10%, but because of inflation, they go up by 2%, that's 12% inflation. It's just that the public didn't realize that inflation was 12% because they don't know that everything would have been 10% cheaper, right, or 12% cheaper if the government didn't create all this inflation.
Listen, do you have a price target for gold for 2025?
Higher. I think we're going to break 3,000, which is not a big call because we're only about $200 below that right now. So, even just a 10% move up in the price of gold, and you're going to be above 3,000. But I think we're going quite a bit higher than 3,000. It's hard to say how much higher, but it could be a lot higher, and it's going to go higher, I think, in 2026 and 2027. And it's not really because the gold's going higher. It's just that the dollar and the euro and the yen and the pound are all going lower. In fact, even though we're not at a record high today in gold, we're still about $10 below the record high in dollars. We're at a record high in every other currency just about. I haven't checked the Swiss franc, but I could tell looking, we're at a record high in euros and in pounds and in Aussie and Canadian dollars. And, so there's a lot of currencies in which gold is trading in record territory today.
Did you buy yet Melanie Trump meme coin yet, Peter?
Yeah, well, look, I think the money's been made. The money's already been made in those meme coins, right? The way you make them is I read somebody bought like $1 million worth like right away and cashed out with maybe 100 million. I don't know. So there are some people that really were in the right place at the right time. And I'm sure there were people that made tens of millions or more in the Trump coin. But it's hard to believe there's another big leg coming in these things. I mean anything is possible.
The question I'm asking,
it's all pump and dump. You're buying nothing but air. But the funny part about it is there's no real difference between any of these meme coins and Bitcoin. It's the same thing. And they all have fixed supply. There's 1 billion of these Trump coins, Trump tokens. So it's fixed, right? Can't go up above that. So that's the same, selling point of Bitcoin. It's like Bitcoin's got 21 million. Yeah, well, you got 2.1 quadrillion Satoshis, so it doesn't really matter. The key is that, well, it's fixed. Well, so is the Melania coin. There's only a limited number of those. But the problem is there's an infinite number of limited supply cryptos that anybody with a Solana address can create for practically nothing. I mean, you and I could just launch our coins right now, So what are they worth? What like if you own the Trump coin, what does that get you? It doesn't get you like a special audience with the president. You don't get to spend the night at the Lincoln bedroom. If you own the Trump meme coin, it's no different than owning my meme coin or your meme coin or anybody's meme coin, because they're all the same except for the name, but everything else is identical. Although you could play around with the quantity. You get to decide what you want to fix the supply at. If you want to lock up some of the supply, like Trump's supply, initially 20% was released, and there's like a schedule where the rest of the 80%, is released over like a 3-year period. So you kind of have an idea of the new supply that's going to be hitting the market. But it's a supply of nothing.
Yeah.
This whole thing, there are some people that are upset that the Trump, makes a mockery of the crypto industry by launching these tokens. I think he's just shining a spotlight on the absurdity of the whole thing.
Yeah, you said it. I mean, where's another leg coming up on the crypto market? I just don't see where is the money coming from in the next leg. Let's say they suggest $250,000 or $1 million even. Where's that money coming from?
Well, their bet is coming from the government. They think the U.S. government is going to use taxpayer money to buy it. That's their hope. Hopefully, Trump doesn't, do that. It would be bad for the country, bad for the economy, inflationary. But that's the hope. I mean, first they got Wall Street to do it. They ran out of retail suckers, so they got Wall Street in on the game. And one of the reasons that Wall Street is buying now is because they hope the government is going to bail them out with the government buying. And now you've got more and more companies that are going into debt to buy more Bitcoin. It's not just MicroStrategy anymore. He's got a whole bunch of copycat companies that are issuing debt to buy Bitcoin. What an incredible waste of scarce resources. You're borrowing money that could otherwise have been put to productive purposes and using it to buy nothing. I mean, what good is it to buy Bitcoin and stick it on your balance sheet? Who does that help? Doesn't grow the company's business, doesn't do anything. It just enriches whoever sold the company the Bitcoin. But now, you're loading up with more debt. So this is a disaster in the making here with Bitcoin and other cryptos.
Peter, you have a boat being made in Gdańsk for you. When is it going to be ready?
I think October.
October, right? So are you going to come?
Yeah. So
are you going to come here?
No, I'm not going to come there. I don't know. I mean, we'll probably be in Europe again. Maybe we'll stop by. I loved Gdansk. We had a good time there last year, but maybe we'll be more in the south. I don't know if we're going to be up north again. We were going to take a Baltic cruise in the boat, so we were going to go for sure because it was supposed to be ready in June, and so we were going to go to Europe and then use the boat in the Baltic, but it got delayed. They couldn't meet that production schedule. And so we're going to miss the summer season. So I'm just going to ship the boat directly to the Caribbean, where I live, and we'll pick the boat up, or I'll have a captain pick it up in St. Thomas, because it'll go from Gdansk there. But we love the city, old city, but beautiful city on the water.
Peter, nice talking to you. I wish you all the best, and probably going to do it one more time in the future.
Yeah. I appreciate the business that you've that you sent over to Schiff Gold, and people should be buying gold. Silver right now, I think gold's about a record high. Maybe it'll hit a new record high later today in dollars, but silver's still below $31. So
that would be my question, Peter. Why silver always is lagging? Why? What's up with that? I mean, I don't see silver. Everybody's predicting big moves for silver, and it's not happening. It seems like a platinum. It's really
I think silver is being impacted by Bitcoin and crypto because crypto has taken the retail investor out of the precious metals market. Gold is being driven by central banks and more sophisticated buyers. But, silver is considered poor man's gold. Well, the poor men are gambling on crypto. So silver is just kind of like not on anybody's radar. But there's more and more uses for silver discovered all the time. It's a very valuable, useful metal, and it's a precious metal, and it's money. So I think that, it's very cheap, and people should be buying it. They can buy it at Schiff Gold. But the mining stocks, again, I looked, we're in this big bull market in gold because we're right at record highs. And the gold stocks have to rally, 18% just to get back to where they were in October. I mean, gold stocks are in a bear market as gold is in a bull market. So the sentiment is very negative. People just expect gold to crash, and it doesn't crash. It just keeps going up. And, I've been, in the industry investing for 30 years, 40 years. I've never seen sentiment this bad in the gold market at a time where the price action has been this good. I mean, normally there's a lot of greed in a bull market. You don't have fear until you're in a bear market. We've had this bull market that's been dominated by fear the entire way up. I mean, this is not just a wall of worry. It's not like people are optimistic, but they're a little nervous. They're completely pessimistic, right? They're scared to buy anything. And so people should be buying these mining stocks. We have these managed accounts at Euro Pacific Asset Management. I have mutual funds that anybody can buy, no load at Schwab, Fidelity. But if you're an international investor, and you can't buy my funds, you can still set up a managed account at my asset management company, Euro Pacific Asset Management, and we can build and manage a portfolio for you of mining stocks. I got Adrian Day, who's spearheads the team in the gold accounts, and he's very experienced. I'd say second to none as far as his longevity in this industry, and he's forgotten more about mining stocks than most of these analysts know. So I think he's a great guy to be picking the stocks for us. And then we have broader strategies too that are just global value, global dividend payer. I think the bottom's going to drop out of the dollar. I think we're going to have a dollar crisis. I think we're going to have a U.S. sovereign debt crisis. And people are not prepared for it. People are in yesterday's portfolios. They're just chasing momentum in tech, but they should be buying a value and inflation hedges. And the people who are buying Bitcoin, if they think they're buying an inflation hedge, they're wrong. They're buying the ultimate risk asset. They're just buying a sizzle without a steak.
Where is the support line for gold today?
I think it's right beneath the market. I mean, it's tight. There's maybe $100 down. Gold, the support keeps rising as the price keeps rising. The key is, where's the resistance? There is none. Or, I guess in the U.S. dollar, the resistance is just below 2,800. But in terms of every other currency, we've gone through the resistance, right? Because we're at record highs. So I just think there's very little resistance and a lot of support.
But let me ask you the last question: the scenario of the currency crisis. How do you think the currencies of some European countries like Polish zloty will do in a dollar crashing, let's say, scenario?
Well, there's Lottie. It should go up against the euro, I would think. It should go up against the dollar. I think Poland is in better shape than the U.S. fiscal shape, and so the currency should go up. But it'll probably still go down in terms of gold. It's not like there's no inflation in Poland. So,
Yeah.
The Poles should be buying gold too. They just don't have to buy as much of it as the Americans.
Yeah.
But see, we don't think we need to buy it. We just think the dollar is always going to be king. But I think it's going to be dethroned. And I think it's gold that's going to do it. It's not going to be Bitcoin.
Yeah. Again, Peter, thank you for your time. We'll keep in touch, and we're probably going to talk in a couple
Yeah.
months.
All right, Arthur. Yeah, thanks a lot. Have a great weekend.
I appreciate that. Thank you.
All right. Bye-bye.
Have a good one.